Diane, there's not a lot of good options right now.
That's the real problem. I think the market is screaming out, and I hope that the Wall Streeters who meet at the White House underscore this issue, is that fiscal policy is our key lever here. And as Randy pointed out earlier, I know Randy well, and he's right. I mean, you can issue debt if it's for a good reason, and this is for a good reason. We need to bridge this turbulent time. We need to worry about not just the oil industry and bankruptcies there, the effect on the overall credit market, and we need to stop that from mutating into a full-blown financial crisis. And the way to do that is not just with Fed rate cuts, although we will get more. We'll be at 0 by April.
Crazy.
I do think that it's much more important to also step up on fiscal policy to bridge this period in time so that we have something to rebound off of once we get through the disruptions created by the coronavirus.
You know, it seems to me the financial system was operating fine when participants didn't think we were in any danger of going to 0. And as soon as that came in sight, and it really came in sight with the half-point cut last week, everybody just piled into Treasury saying, we're going to 0. Quantitative easing is going to be next, and you can't blame them. I just wonder, should the Fed have stood up and said, we are not going to cut rates here? It's too soon to know the impact. It has to be fiscal policy. Look, yields didn't go up after their action. They've gone to unthinkable levels.
It's a great question. In hindsight's 2020, but I think the Fed was in a catch-22. They were actually priced in to make a cut. And once they said they were meeting and having that collective meeting among the G7 finance ministers with Chairman Powell on that call, you did expect some coordinated rate cuts. And that is exactly what we got. The reality is that we knew going into this that if we hit a really bad economic time, the Fed was limited in what they can do. And I think that's what's coming home to roost now, is that we need to rely on fiscal policy. This is not something that Congress and our elected officials can sit out. They have to step up and work with the Fed, coordinate how they're going to deal with this. This is, back to the crisis. We know one of the lessons of the global financial market crisis was that we didn't step up enough and keep stimulus going enough during the crisis to make it less painful. And austerity became an issue too soon. This is not the time to be thinking about austerity when it costs nothing to issue this debt. There's good reason to issue it to bridge this period in time for very many good reasons, as Randy pointed out.
No, I haven't heard the word austerity in years. I don't think anybody's thinking about that yet. They might be a little worried about moral hazard, but I want to go back to something that you said about, what the market has priced in, and that's, I don't know why the Fed needs to worry about that. I mean, if the idea is we want yields to go back up, we're worried about the price action in stocks and bonds, a fiscal announcement could have solved that the first time. It can still solve it now. If the market thinks the Fed's the only game in town and the Fed feeds that perception, they're going to make the Fed cut to 0. Doesn't mean they should. You know what I'm saying?
Well, they still have to. I mean, the reality is if we get into a disorderly kind of correction, they don't really have any choice. All bets are off. It is their job to go against, to try to stimulate as the economy falters. And it's unfortunately, they do not have the ability to force the rest of Washington to do something. And I don't think holding rates up high to try to do that is the best way. We did see that once in the past. That was in 1990, and it didn't turn out so well for the George W. Bush, H.W. Bush administration when Alan Greenspan withheld easing to try to get to austerity back then, to try to raise taxes back then to reduce deficits. And we ended up in a recession that we had a hard time getting out of. It's just not something, a game the Fed can play. It's out of their lane. And I think that's the hard part, is they have to respond to the economic fundamentals. And those are deteriorating quite rapidly. And that's what they're responding to.
Yeah, I'm just saying if they got up, even now and said what I'm sort of calling a coronavirus Marshall Plan, right? If the government is going to spearhead this massive effort, then it wouldn't have made a difference.
That'd be great.
Yeah,
I agree.
It wouldn't have mattered how much the Fed cut. Arguably, the cuts would have been irrelevant.
Well, I'm not sure they would have been irrelevant, but it certainly would be the lesser of the problem, and we wouldn't be looking at the Fed to shoulder a burden we know they just can't shoulder. And I think that's what you're seeing. You're seeing markets scream out and say, please help us with fiscal stimulus. We need something here to get through this period in time. I mean, how can low energy prices help consumers who are no longer going out to sporting events, no longer going out to conferences, no longer driving as much, or staying at home away from work, or not able to work? It just doesn't have the same kind of positive impact that it once did either, given all the other changes, and the knockoff effects into credit markets are quite significant.
All right, Diane, thanks.